So we got rid of the picture. So as I say, U.S. elections will drive the markets in November. God knows what's going to happen. And we've said before, the markets are priced in a Hillary win. So if that happens, you shouldn't expect too much excitement. Now there might be a nice rally the next day or something like that. But you know, if it's they know it's going to happen, it's already the market's already adjusted. So watch the few days before the election, like the week before, the Monday before. See where the market is moving. That will tell you what it's thinking.
Excuse me.
That would be very wrong, but it'll tell you what it's thinking.
All right, thank you.
So, and in Brexit, the market was rallying for the week before. So say, hey, Brexit's going to fail, Brexit's going to fail. So the market thought that, and then it got like hit in the face by like a 2x4 ball. And you know, Trump wins, the same thing will happen. Also, if the election is contested, if it's like within like a tenth of a point or less than a tenth of a point, it's not clear who won one state, you know, the market will go crazy. It will not like that at all. So look for bad economic news after the election. This happened in 2012. Suddenly, like, things get way, way worse. They didn't really get way, way worse. They just, like, adjusted the figures upwards before the election to make things look good. And this happened in 2012, and I even wrote about it. I said, they're phoning up the numbers. Wait till after the election, it's going to get much worse. Then all these horrible numbers came out after the election. And they just simply, like, they put in an extra 50 here, and then they took the 50 out after the election. That's nothing really changed. So this game is being played to the hilt with this stuff. So the numbers, suddenly the economic numbers are going to look worse. And that doesn't mean they're really worse. They were bad already. So the Fed right now is on schedule to raise rates in December. They have a meeting right before the election. They wouldn't dare raise rates then. That would be considered blatantly political. They make tons of noises about they're going to raise rates before in December. So that will hurt the markets also. That's not a plus. David said, like, it looks like the markets are going to go down. Well, here's the reasons the markets can. There'll be like news that drives them on. So currently, the big news this month, the U.S. dollar has been rallying, and the euro and pound have been really selling off. So, and a dollar rally holds the price of commodities down. So keep that in mind. And I actually wrote an article in Seeking Alpha about the pound dropping. The FTSE, which is the stock market, has been going up and up and up, but the pound has been going down and down and down. And if you adjust for the FTSE in currency, you find that hasn't changed at all. So if you're a dollar holder and you invested in it, you actually get no money. It looks like you're making money, but when you actually convert back to dollars, you're not getting any. And I've even seen articles, oh, you should have invested in the FTSE, look how much money you could make. And they don't take into account this like currency. So I say, God, people are idiots. So precious metals, we're going to see about it. They have had a sell-off, and David mentioned this, and they're trading right along their 200-day moving average, which is key support. They've been doing this for weeks now. So this is like interesting. They're holding important support. Natural gas broke out, and I wrote an article, and then it like broke down. And I know why it broke out, I don't know why it broke down. So, and oil is trying to break out, but this dollar rally is holding it down, though. So this is one reason it hasn't broken out. And you can't believe most of what you read about the oil market. And, you know, I write articles on it all the time, just to try and correct the record. There's a banking crisis in Europe. We've mentioned this 100 times. It's not gone away. It's not been solved. There's going to have to be some big bailout, as David said, Deutsche Bank, probably Credit Suisse, the entire Italian banking system, which has been completely bankrupt, insolvent. And like these banks, they're insolvent, but they just keep going along. And then, you know, the central bank is pumping enough money into them, which Japan did for years and years and years, to keep them operated. That doesn't mean they're actually real businesses. They're not. Deutsche Bank is beyond insolvent. And Italian banks, for years they've been insolvent. So that can burst forth at any time. If like Deutsche Bank had to be bailed out or something, and Deutsche Bank holds trillions of dollars in derivatives. It is like a toxic waste dump in the financial markets that could just blow up. You could like be the Fukushima Daiichi of the financial market. Now, okay, the Dow, this is quite interesting. This is the 50-day moving average, this yellow line. Notice it has been trading right below that for weeks now, like 6 weeks now. And it goes up to it, goes down, it goes up to it, you know, it won't go down, it won't break through. So this is a market, and the RSI is around 50, MACD is around 0, the DMI is trendless. This is an indecisive market. It's waiting. It is waiting for the election. It is so obvious. We don't know, we don't want to do anything. This is like total indecision. And when the election comes, then we'll do something. So we will see. S&P looks exactly the same. The Nasdaq has been much stronger than the S&P and the Dow. And it's riding along this 50-day. And notice this blue line's about to cross, which would be a buy signal. If it falls down below that, generally you have to get to the blue line if you fall below the yellow. So, but the tech stocks have held up the best. But I think Amazon had bad earnings today. Does anyone, just after the close? Yeah, and how much was it down there?
I think it was down 4%.
That's
down
nothing.
to 7.7.
That's nothing. Maybe it'll be like much worse. So like these, that's in a bubble, right?
Yep.
Yeah,
All the FANG stocks, Facebook. And
yeah, so like, and they had bad earnings, so like maybe this will start bursting back. So these indicators are pretty indecisive also. The Russell has fallen below that 50-day, and it's not riding it. It looks like it definitely wants to go down here. And these things are all indecisive. So we have like the U.S. stock market, just very like sitting there waiting. Foreign markets, the FTSE had a big rally because we're going to see the pound. Like, the pound is going down just as much as the FTSE is going up. You average them, you get nothing. But you can't tell. So this is actually quite bullish. This blue line's above this, so stocks are doing well. But you know, you've got to take, if you're a dollar holder, you have to take the currency into account. And the currency is the mirror image. It's a disaster. And worse than it, it's a disaster with the stocks are bullish. So you don't want to invest in any market where the currency is going down. The currency is bearish, but the stocks are bullish. You want them both to be bullish. And that one champion is Brazil this year. So this was bullish. This is actually, this rally is getting a little challenged down here. The buy signal fell apart. So we'll have to see. The DAX is like holding up, but the euro is also going down quite a bit. So it's a fake rally, basically. This is a very indecisive pattern, once again. Deutsche Bank is the insolvent bank. Deutsche Bank is a major international bank. It'd be like Citibank failing here and becoming insolvent. It's not a small problem. It has its tentacles in like the whole world. So it would damage the financial system and set up a whole new financial crisis. So you know, this got to somewhere above 10. This is, I think David showed the chart. It's actually below its credit crisis low in 2009, which is a sign of incredible weakness. Credit Suisse also, the Swiss bank also has the same problem. All the Italian banks have this problem. The Italian banks are, 3 of them are actually penny stocks. And like a penny stock means a stock that's, you know, if it actually had some value previously, it means it's going bankrupt or about to declare bankruptcy. And like this Monte dei Paschi, which is a 500-euro bank in Italy, actually went down to like 17 cents, 16 cents. And it went up 4 cents the other day, and there's like a certain percentage limit in the Italian market. They had to stop trading because it went up too high a percent. 4 cents made that too high a percent. Yeah, it's like Italian comedy. It's like, and these banks just keep going on, and they keep operating. You know, we live in this world that's also devoid of reality, the financial system. So this is also pretty indecisive looking. This is that bank that's just riding the bottom, basically. And then if like really something really bad happened, it would go below. The Nikkei has been sort of damaged. This is a very negative pattern because the red line's on top. The yellow line just crossed the blue line. That's the first sign something positive could be happening. But you need a lot more than that. And as we keep saying, the Nikkei peaked in 1989, which was like before that man was born over there. There's actually at least one person in this room who was born after the Nikkei peaked. And maybe more than one. That's how long it is, and it's nowhere near its high. There's no one even remotely thinks it's going back to its high in any foreseeable future. So people say buy and hold, you'll get your money back. Well, if you're Japanese, you don't believe that. Say, wow, I was 20 when I bought it, I'm retired now. So beware, this is not always the truth. Okay, let's look at emerging markets. Brazil has been the big success story this year in the whole world. Not only has the market had stocks had a huge rally, the currency is the #1 performing currency. So you get your returns are supercharged, hypercharged. You're getting returns from the currency and returns from the stock market. So this is still quite bullish. It's a little overdone. This is the ultimate sign of a long-term rally. So it's in great shape. This is a buy signal right here, so that's fine. This is above 50, which is bullish, above 0, which is bullish. So this chart looks quite strong. That doesn't mean it can't come, it needs to come back to this yellow line. At some point, it will come back to that blue line. That's still a valid rally. Nothing has changed. So the Shanghai, China is exactly the opposite. China's had 2 bubbles, as David pointed out. It's just like thumping along the bottom. It definitely needs to go down in the future again. And then China's a mess. China is actually very much like the U.S. in the 1920s. The U.S. was a major manufacturing power with huge GDP growth, hard to imagine now. And the GDP growth was based on exports. The picture is very similar to China. And then, of course, 1929 came along and the 15-year depression. So, like, overextension can, like, in environments like that, can destroy everything. So this is just bumpering along, going over in particular. India, the Sensex was having a big rally. It's been bullish for a long time. It's riding along under that 50-day, just like the U.S. stocks. This is negative. This is negative. This is trendless. So that's like this rally is not power. It's challenged at the moment. It could have a big drop. Russia had a big drop. Russia is a commodity-based country. It's extremely dependent on oil, but it produces more commodities than any other country on Earth. And it doesn't have a lot of manufacturing compared to other countries. Well, China is also China and India are also major commodity producers, but they are they consume mostly their commodities. Russia actually can export. It doesn't do anything else. So this is sort of sideways moving here. All cases is sideways moving. So this will be dependent on oil rally and other commodities. If commodities have a huge rally, which they will, they've started one. It may take a couple more years before it really gets started. Russia will do really, really well. So here's currencies. Currencies are the big picture. This is the dollar. There's all this talk, the dollar's rallying. I'm telling you the dollar's rallying. This is how much the dollar's rallied. These are other currencies that have rallied. The dollar's rallied over the year. It's actually been flat. The dollar's rallied in the last couple of months, 5%. But Brazil is up like almost 40% for the year. So compare that to like 0%. I mean, no one. How often do you hear Brazilian real? Wow, what a success story. No, you hear dollar. And like even the this is the yen, the blue line. It's up 15%. And these are like the Norwegian krona, the Australian dollar, and what's the other one? The Canadian dollar. These are all commodities. Norway is dependent on oil. Australia, the Australian dollar trades with gold, and the Canadian dollar is a commodity-based economy. So these three are commodity-based. Brazil is also fairly a commodity-based economy. And it has special factors. Why it's going up, I have no idea. They impeached the president. It's a total mess, and like everything went to the sky. Here's the U.S. dollar. You see, this is the rally everyone's talking about right here. You see the chart, so that yellow line is rising, which is quite bullish. First, it must pass this red line, which is not, that's the first sign of a rally. That's not happened yet. Then the blue line must go above the red. And that's not happening. And there's big resistance at this 100 level. This red line here, that's major resistance. So it gets there, it's going to get stuck. It can't just like shoot past it. It's going to like sort of be held down there. So this is extremely bullish, a very strong trend. This is bullish. So the whole chart at the moment is bullish. Now Trump was elected, the dollar will go down. That was like not 10% like it was. Pounds overnight. So here's the euro. You see, it's just as the dollar went up. Let's look. See the dollar. Look at this. Memorize that. Here's the euro going down by the same amount. It's like a mirror. You can put it in a mirror. You get the euro chart. So it's falling apart. It's down to 106, which is incredibly low for the euro. And if it's down like around 104, if it breaks this level, it will go. For years, people have been waiting for it to go to 1 to 1. So it's getting close. It will happen. We'll see. These seers will be proved. And it might go below 1 to 1. That's the. And 1 to 1 will be very strong support. But this is negative. This is negative. This is down. So this whole chart's negative. Now this can't go down forever, maybe because it's getting too far away from these lines. But it could go back down and test that support around 105. And then go even lower. Here's the pound. This is what happened in Brexit. You see there's this huge gap. It just like dropped. The bottom just totally dropped out of it. But notice, and then it went sideways, but notice it's going further down to 120. And it can continue. This chart's totally bearish. This is bearish. This actually went below 20, which is very bearish. This is below 0. This is on the sell signal. So there's nothing positive about it. The pound is in trouble. The Swiss franc, which is actually a valuable currency, is down to like 96 cents. That's very cheap. But it's like tied to the euro unofficially. It was officially for many years. So this is like a sell signal right here. And the euro is in big trouble. So we will go with the euro. So if you want to buy something after big sell-off, you buy this Swiss franc. No, don't buy it. The Japanese yen has been extremely strong. It's a very bullish chart. Notice it's falling below this yellow line. It's got to get to this blue line at the very least. This is bearish. This is bearish. This black line crosses this blue line that's bearish. It's sitting right on it. So this wants to go. This is trying to go down. Now it's had a huge rally during the year. So.
Daryl, do you have a chart of the Mexican peso?
No. If you request it ahead of time, I would like.
I was just curious because it seems to be highly correlated to Trump.
Inversely correlated.
Yeah, inversely correlated. Yeah.
And I said, no, it shouldn't go up with Trump.
Inversely correlated, yeah.
Yes, if Trump is elected, a Mexican peso will fly. The Mexican
So it's been quite strong over the last.
Short those two things if you think he's going to be elected. But they'll probably rally if Hillary's elected. So, like, you're playing a risk game, no matter what. There's a number of if you sat down, you could find a number of assets. And, you know, coal and guns are like the Mexican anything would also be there.
Do you long concrete, short
Well,
pencil?
construction.
Well, yeah. How much? What would you build the wall at? Buy brick companies. I don't know who makes bricks. No, there are companies that make big construction material. If he's going to build some wall across half the United States, for God's sake, they'd be really bullish for those companies. So here's the Australian dollar. This is sort of going sideways. It will ultimately move with gold. All these things are sideways moves. Gold is going sideways right now too, also, so it all makes sense. What happened? Okay, oil. I'm much more bullish on oil than David, and I write lots of articles about it. I think it's going to break out. The Middle East is actually at its capacity production, which no one tells you. You know, and they have increased production enormously since 2009 in the last like 7 years. And you hear, oh, U.S. fracking, U.S. fracking, U.S. fracking. Yeah, U.S. fracking increased production too, but the real glut actually came from Middle East production, and somehow that never gets reported in the press. And you just have to look at the numbers and go, oh. But they brought online also the very marginal oil that's difficult to produce. So this is not cheap oil. It's not $20 barrel oil. So, and they probably can't produce anymore at the moment. It usually takes several years to create the infrastructure to move higher.
But if demand is destroyed, you're right, it might be a capacity in terms of supply, but if demand is
No, demand is grown at
not
incredible
if
rates.
there's a recession.
Well, we actually, like, the demand has grown And demand is actually for oil has grown 1.6 million barrels a day since 2000.